What's up, everybody? Welcome to Stock Talk with Nico Criticos. Today, we're going to be going through the reasons I am bullish on Ollie's stock. So this is Ollie's Bargain Outlet we are talking about today. And what this company does is they pretty much buy products and inventory from big retailers like Target or Walmart after those big retailers don't want those products anymore. So Ollie's gets these products incredibly cheap, and then they sell them at a higher profit to their customers. So if we look at their revenue and income the last couple of years, we can see from 2014 to 2020, their revenue has 3x, and their earnings have gone from around 35 million to last year they did 242 million. So this company has grown very nice and steady over the past 7 or 8 years. And if we look at the stock chart, we can see that over the past couple of years, it was going up. It was $27 back in 2016, and then it topped off around 109 about a year ago in August of 2020. But now the stock has fallen all the way to $59 a share, and this does not reflect at all what the company is doing fundamentally, because as you see here, their revenue and income has been growing. Their equity on their balance sheet has also been growing. It's gone from 796 million 3 years ago to now it's 1.3 billion. So everything's in check there. But the reason the stock fell these past couple months, ever since August 10th, was because they missed their earnings and their numbers by just a little bit. They came in like 5% under what analysts were expecting. And then for the rest of the year, they said they didn't give too good of guidance because they said they weren't sure what the rest of the year is going to look like. And one thing you have to keep in mind here is that the reason the stock shot up so much in 2020 was that because everyone was stocking up on things at this time. Right around this summer of 2020 was when, people weren't sure what's going to happen with the pandemic. So they went out and stocked up on all the water and everything, whatever else they bought. So that's why sales were so good for them this year. So of course, demand's not going to be like that forever, but the company is still growing. And so this giant dip in the stock price here does not make too much sense. Then another nice thing with this company is that if we go to their return on invested capital, we can see that they're making 25% on their invested capital. Okay, that's incredibly high. And to put that in comparison, if we look at a similar retailer, Big Lots, which pretty much does the same thing as Ollie's, their return on invested capital is only 8.4%. So you can see how Ollie's is really doing good with the way they run their business. Then if we look at, let's go to, based off of 13 Wall Street analysts, the average price target is $83. And so that's roughly, I see it getting to at least $83. And I think next earnings report, they're going to have better guidance, and then that will put more confidence in the stock and in the investor base. But as of right now, the company is expected to still grow next year, go from $2.71 of EPS this year to $3.07 next year. Then they're expected to grow revenues 11.7%, which is still great. So everything is looking intact for this company. That's why I'm not sure why the stock is being beaten down so much. And so, it's possible the stock falls a little bit more. Maybe it comes down to $50 a share or something, but I don't see it falling underneath that. So right around this $60 mark is a great time to buy in. The forward PE on this company is a 22, which is a lot cheaper than it's been trading at in the past, as you can see here. And everything just looks intact here. Their profit margins are fantastic, operating margins of 15%. And yeah, those are all the reasons why I'm bullish on Ollie's. So let me know what you guys think.